Hello, Adrian Jones here at Tradeology. Thanks for joining me today. And I'm going to cover an important aspect of trading. It's determining the Forex market hours and seeing how that impacts on your trading. A very important topic that many traders overlook. And today I'm going to cover that for you. So I'm going to get started straight away. And I have a presentation here for you. So just 1 second while I get this set up. So we're covering the Forex market hours. And if you are a stock trader, as many of you might be, you know that Wall Street runs on regular business hours. However, we as Forex traders need to be aware that the Forex market runs during the normal business hours of 4 different parts of the world and their respective time zones. This means that from Monday to Friday, based on where you are located, of course, trading can last all day and night. Add to this that because it's a 24-hour market, many first-time Forex traders and also some more intermediate traders tend to start by wanting to hit the markets running, but don't know when exactly to start or stop. Their time is spent browsing various economic calendars and trading full-on with the release of every bit of data, staring at their screen, waiting for volatility, not sleeping, not having a routine, and basically on edge 24 hours a day. You can see how, and you might recognize yourself in this, you can burn yourself out very quickly, even if you are a very persistent trader, and of course this leads to many eventually giving up trading altogether. There's no need for this though. The good news is that if you can gain an understanding of the market hours and set appropriate goals and schedules, you'll have a much stronger chance of realizing profits and simultaneously doing so within a comfortable working schedule. Let's go through how we can do this together. The first thing we need to do is understand the hours of operation in the Forex market. In this presentation, when I refer to times, I'm referring to hours in Eastern Standard Time, or EST, or ET, or New York time. You will have to adjust the time based on this depending on where you are in the world. Now, the Forex market is open 24 hours a day, as I mentioned, 5 days a week, and is made up of banks, different commercial companies, central banks, hedge funds, investment management firms, not to mention retail Forex brokers and investors around the world. In the interbank Forex market, the majority of large international banks have multiple offices around the globe so that they can pass their local clients foreign exchange orders to an affiliated branch at any time during the 24-hour cycle. This process would typically be executed in an orderly fashion at any hour of the working week, unless interrupted by a bank holiday. Banks would operate during regular business hours at each regional office, and the opening trading book is passed on to another regional office, usually in a later time zone. Now, during each Forex session, the city with a major financial hub in the relevant region is given the sessional title during their business hours. I'll get into that in a moment. If you are trying to analyze the best time to trade Forex currency pairs, it's paramount to understand these different sessions and which currencies of markets or markets are most liquid during these business hours within a relevant Forex session. Right, so what are the Forex trading sessions? Now, let's just go through this. The international currency market is not actually dominated by a single market exchange, but instead entails a global network of exchanges and brokers throughout the world, right? So Forex trading hours are based on when trading is open in every participating country. So the 4 major Forex currency trading sessions are as follows: London, New York, Sydney, and Tokyo. The day would start, if you're in the East, with the Tokyo session and the Sydney session, then move through to the London session, and then through to New York session. Now, if you're in the New York session, you would move through to Tokyo, Sydney, and eventually get towards the London session by your next day. And of course, if you're in London, you start off in London time, move through to New York time, and then eventually later in the day due to the Asian session, which is Tokyo and Sydney. There are minor trading sessions, and these are as follows. We have Wellington or Auckland, Frankfurt, Hong Kong, and Singapore. I'm not going to cover these in this particular presentation, but just to be aware of them. The pattern tends to follow that as one major Forex market closes, another one opens. There are certain times that are more active, and it's important to keep track of these. We will examine these different sessions and the best times at which to trade them in more detail. Right? And let's have a look at these. As I mentioned, one of the greatest characteristics is that the market is open 24 hours a day, 5 days a week. So investors around the globe can trade whenever they want throughout the working week. But not all times are created absolutely equal. Forex times around the world when price action is consistently volatile happen at certain times, and there are periods also when it is completely muted. So multiple currency pairs display varying activity over different times of the trading day, thanks to the general demographic of those market participants who are online at that particular time. This pushes us to accept the major trading sessions in Forex as being directly interconnected with market hours. Even though a 24-hour market offers a substantial advantage for many individual and institutional traders, as it guarantees liquidity and a solid opportunity to trade at any possible time within the established Forex hours of trading, it is not deprived of certain pitfalls. Although different currencies can be traded anytime you wish, a trader cannot monitor a position for such long periods of time. So this implies that there will be Forex trading times when opportunities are missed, or even worse, when a jump in market volatility leads the spot to move against a set position when the trader is not nearby. So in order to reduce such risk, the trader has to be aware of when the market is most commonly volatile and therefore decide what times are best for the individual trading strategy and style. So as we mentioned, the market is separated into major sessions, and during these sessions, activity is at its peak, with the Asian session, the European and North American sessions essentially. Now, more commonly, these three periods of Forex hours are known as Tokyo, London, and New York. Okay, or could be referred to as the Asian session, could be interchanged with Tokyo and or Sydney, and European session with London, and North America with the opening of the markets in America with the New York session. So the names are used interchangeably, as I mentioned, simply because these three cities represent the key financial centers for each region. Markets are most active when these three powerhouses are conducting business, as the majority of banks and corporations make their daily transactions. There is also a greater concentration of speculators online. Now, again, currency trading is unique because of the hours of operation. The week begins at 5 p.m. Eastern on Sunday and runs until 5 p.m. on Friday. So let's have a brief overview of the main markets. The North American or New York trading session. So this opens at 8 a.m. New York time, obviously, to 5 p.m. It's the second largest Forex platform in the world, watched heavily by Forex investors because the US dollar is involved in as much as 90% of all trades. When the North American session comes online, the Asian markets have already been closed for several hours, but the day is only halfway through for the European Forex traders. The Western session is influenced by activity in the US, with a few contributions from Canada, Mexico, and other countries in South America. Not surprising, activity in New York marks the high in volatility, as well as participation for the session in North American Forex market hours in GMT time, right? So considering the early activity in financial futures, commodity trading, and the visible concentration of economic releases, the North American hours non-officially start at 12 GMT. Now, this can vary wherever you are in America based on your time zones and based on, of course, whether summer sessions or certain time zones do change from time to time. But generally, New York is roughly 8 hours behind London time. That does change in summertime and in wintertime by an hour. So with a substantial gap between the close in the US markets and the Asian Forex market opening hours, an interval in liquidity establishes that the close of New York Stock Exchange trading, if you're in London, at 8 GMT, because the North American session comes to a close. That's at 5 p.m. Eastern. Right, so the Asian or Tokyo trading session. Tokyo in Japan opens at 7 p.m. Eastern to 4 a.m. Eastern. It's the first Asian trading center to open and takes in the largest bulk of Asian trading, just ahead of Hong Kong and Singapore. When liquidity is restored to the Forex market after the weekend, Asian markets are naturally the first to observe action. In other words, Forex market trading hours start there. Activity, although not officially, from this part of the world is actually represented by the Tokyo capital markets. Nonetheless, there are a lot of other countries which have considerable pull that are present during this period, including Australia, China, New Zealand, and Russia. Taking into account how scattered these markets are, it makes sense that the start and end of the Asian session is stretched beyond the standard Tokyo markets or hours for Forex. In fact, to allow for these different market activities. So we have Sydney, which actually falls also under the Asian session, so to speak. And let's just cover that. So Sydney in Australia opens at 5 p.m. Eastern Time to 2 a.m. Eastern Time. And this is when the trading day officially begins in Australia. So while it is the smallest of the mega markets, it sees a lot of initial action when the markets reopen on Sunday afternoon, because individual traders and financial institutions are trying to regroup after the long pause since Friday. All right, so as I mentioned, this is included under the Asian session we covered a short while ago. So we have the European or London trading session. So London in Great Britain opens at 3 a.m. to noon Eastern Time. Late in the trading day, just prior to the Asian trading hours coming to a close, the European session takes over in keeping the currency markets active. This Forex time zone is very dense and involves a number of key financial markets. London takes the honor of identifying the parameters for the European session. So this trading period is enlarged owing to the other capital markets' presence, including France and Germany, prior to the official opening in the UK, whilst the end of the trading session is pushed back as volatility holds until London closes. Therefore, the European Forex trading hours, GMT, if you're in that area, are commonly observed as running between 7 a.m. GMT and 4 p.m. GMT. As I said, if you're in North America, you would have to adjust for this by roughly 8 hours. So the United Kingdom dominates the currency markets worldwide, and London is its main component. London, a central trading capital of the world, accounts for roughly 43% of global trading. In fact, this is increasing. The city also has a big impact on currency fluctuations because Britain's central bank, the Bank of England, which sets interest rates and controls the monetary policy of the pound, has its headquarters in London. Forex trends often originate in London as well, which is great for technical traders to keep in mind. Technical trading involves analysis to identify opportunities using statistical trends, momentum, and price movement. And most of my students are technical traders, as am I. So the best hours for Forex trading. Not all hours of the day are equally good for trading. So the best time to trade is when the market is most active. Now, when more than one of the four markets are open simultaneously, there will be a heightened trading atmosphere, which means that there will be more significant fluctuation in currency pairs. So when only one market is open, currency pairs tend to get locked in a tight pip spread of roughly 30 pips of movement. Now, when two markets open at once or are open at once, you can easily see the movement north of 70 pips sometimes, particularly when big news is released. So let's have a look at these overlaps in the Forex hours and sessions. The best time to trade is during these overlaps in trading times between open markets. Now, overlaps equal higher price ranges, as I've just mentioned, resulting in greater opportunities. So let's have a closer look at the three overlaps that happen each day. If a currency pair is a cross made of currencies that are the most actively traded during the European and Asian markets, such as the pound, yen, or the euro, yen, the pound and the euro, of course, being part of the European Forex market hours, and the yen being part of the the Asian market hours, there will be a much greater response to these pairs to the European-Asian session overlapping, and therefore a less noticeable increase in price action during the European-North American sessions. Right? So these will be more active during the European-Asian session. Now, the Asian or European session overlaps are presented in pairs that are vigorously traded during Asian and European Forex market hours. So long-term or fundamental Forex traders attempting to set a position during a pair's most active market hours would lead to a poor entry price, or missed entry, or a trade that counters the strategy rules. On the other hand, For short-term traders who do not hold a position overnight or even longer, volatility is absolutely vital. So, as we've seen the US and London sessions, let's have a look at these. The heaviest overlap within the market occurs within the US or London markets. More than 70% of trades happen when these markets overlap, because the US dollar and the euro are the two most popular currencies to trade. All right, so this is the most optimal time to trade since volatility or price activity is high. Now, of course, the pound also comes into play during this overlap. So we have the Sydney or Tokyo session. This time period is not as volatile as the US-London overlap, but it still offers a chance to trade in a particular or a period of higher fluctuation. Euro-yen is the ideal currency pair to aim for, as these are the two main currencies influenced. We also have the London-Tokyo session. Now, this overlap sees to the least amount of action of the three because of the time. Most US-based traders won't be awake at this time, and the 1 hour overlap gives little opportunity to watch large pip changes occur. So let's take a look at which of the major pairs are the most affected by each session. So just got a representation of it here to make it easier. So during the Tokyo session or the Asian session, that's from 7 p.m. to 4 a.m. Eastern, the following pairs will be most active: pound yen, USD yen, the Australian dollar, US dollar, New Zealand dollar, US dollar. And of course, we're talking about the major pairs here. So during the London session, also known as the European session, from 2 a.m. to 12 p.m. Eastern, we have any pairs that involve the pound and the euro. And during the New York session or the US session, from 8 a.m. to 5 p.m. Eastern, we have the following pairs that are most active. The major pairs, we have the pound USD, USD CHF, and the euro USD. So you'll be looking during each of these sessions to, if you're a day trader, to specifically be looking at these pairs, these major pairs. So we also have something else that we need to take into account, and that's the impact of news releases on Forex markets. While understanding the markets and their overlaps can aid a trader in arranging his or her trading schedule, there is one influence that should not be forgotten, and that's the release of the news. A big news release has the power to enhance a normally slow trading period. So when a major announcement is made regarding economic data, especially when it goes against a predicted forecast, the currency can lose or gain value within a matter of seconds. Even though dozens of economic releases happen each weekday in all time zones and affect all currencies, the trader does not need to be aware of all of them. It's important to prioritize news releases between those that need to be watched versus those that should not be monitored. And I do give separate lessons on this in my trading presentations. So in general, the more economic growth a country produces, the more positive the economy is seen by international investors. Investment capital tends to flow to the countries that are believed to have good growth prospects and subsequently good investment opportunities, which leads the country's exchange strengthening. As a country that has high interest rates through the government bonds tends to attract investment capital as foreign investors chase high yield opportunities, stable economic growth and attractive yields or interest rates are inexorably intertwined. So that's just to bear this in mind. And some of the significant news events include interest rate decisions by the central banks. I'll just cover these briefly. CPI data, trade deficits, and that just basically means more imports as opposed to exports, consumer consumption, and central bank meetings. Also have consumer confidence indexes and GDP data or gross domestic product data and unemployment rates. Also have retail trade measures. And so you see that there's various news, and throughout each of the sessions, there could be major impact news events happening during those sessions also that could affect that particular pair we discussed earlier. So the riskier market hours for trading. During low liquidity, usually when a market opens and at around 12 a.m., there is a considerable risk when trading. Low liquidity might bring higher volatility, and this is not usual during normal trading hours. Professional traders do not recommend opening positions between 12 and 2 a.m. Most of these high-risk times can put a trader's account at risk. So various risk factors to have a look out for are volatility spikes. Low liquidity might cause volatility spikes that are easily able to hit your stop loss. And low liquidity is related to the Forex market's depth, and it impacts the ability to handle large transactions effectively. You also have the dealing spread to consider, and spreads usually widen around 12 a.m. So the best time to trade the Forex market, of course, it depends on where you are in the world, but we have looked at the worst times. What are the good times? So the first 3 hours of each major session are usually the best in terms of momentum, trend, and retracement. It's then that traders tend to find the best trading possibilities. Additionally, what's known as the TOTH, or top of the hour, the first and last 5 minutes of each hour will usually provide volatility and spiky market movements. So is there a way to automate these hours on your chart? Yes, you could. Let me show you an example of a system with a custom indicator for this on a chart. And we can get into that now. I just want to stop sharing for a second and then open, or rather move over to a chart. So various systems have various methods, indicators, and so on. And not all will tell you about market hours. There is one particular system. I'll let you know how to find that a bit later in the presentation. But for example, it is possible to automate market hours so that at a glance you could see each session at that time of day. I'm on a 15-minute chart at the moment, or 30-minute chart at the moment, sorry, the Euro USD. And if I just had to look at this, I'd be able to see at a glance where exactly I am at a given time as far as the markets go. So, for example, now I'm just getting to the close of the Asian and the open of the London session. Right, so I'd be able to see that at a glance if I wasn't sure, if I'm moving around the world, but it also just gives you a good representation, and these are all adjustable depending on where you are in the world and so on. So having an indicator like that is also very helpful. It is part of one of these systems we have called Tradeology Pro. I'll let you know about that in a short while again. So let me just go back to where I was and try and get to recap. Once I go out, I have to go back in again. And let's just get back to that particular slide. So let's just have a look at some conclusions we've reached here. Forex market runs on the normal business hours of 4 different parts of the world and their respective time zones. US London markets overlap, and this has the highest volume of trading and is the best for trading opportunities. The Sydney Tokyo markets overlap. It's not as volatile as US market and London overlap, but it still offers opportunities. When trading Forex, a market participant must first of all decide whether high or low volatility will work best with the individual trading style. Price action is more important. Trading the session overlaps, or just ordinary economic release times might be the preferable option. The following step would be to decide what the best times of day are to trade, given the bias for volatility. Those wanting high volatility will need to identify which time frames are most active for the currency pair they are aiming to trade on. So when considering the Euro USD, the European North American session crossover will find the most movement, for example. There are usually alternatives, and an FX trader, Forex trader, should balance the necessity for favorable market conditions with physical well-being. You want to be able to live your life. So if a market participant from the United States actually prefers to trade the active Forex trading session for the pound yen, for example, they will have to wake up very early in the morning to keep up with the market. And that's fine. If that's your trading style, if that's how you set or schedule out your day, that is fine. So if this person also has a regular day job, this could lead to considerable exhaustion and mistakes in terms of judgment when trading. A much greater alternative in that case would be for the trader to trade during the European and North American session overlap, where volatility is still high. Additionally, a good knowledge of how to trade during the best trading hours, coupled with basic understanding of Forex trading sessions in general, and provide you with an advantage in terms of your trading currencies, or of trading your currencies pairs properly. So, and as I mentioned, it is possible to have these indicators designed, and we do have one. Thanks for watching, and please could you hit the button below to get the report, either the report or to learn more about Forex trading. And if you're watching this on any of the social media platforms, you'll see a link in the description below. Thanks for watching, guys, and I hope to see you soon on another video.